Hello and welcome everybody. Today I am very excited to be with you all and to present the fifth MBoxWave webinar hosted by NinjaTrader. So before we begin, I'd like to thank NinjaTrader for hosting this webinar, and I've done already, this will be the fifth one, so we've been doing this for a while now. And also what's very exciting is that this year MBoxWave turns 10 years old. So we are celebrating 10 years of giving traders an unfair advantage. So that's kind of like a celebratory moment for me because MBoxWave has been around for a while now. The 10 years is since it's been available to the public. I had been trading versions of MBoxWave before that, but it's been around publicly for over 10 years now. So I'm very excited today, and I've got a hot topic surrounding the latest events that have been going on politically and economically, and seeing how it's been affecting trading and what we can do with MBoxWave to analyze it as well. So I'm going to just jump right in, and we're going to go through these slides one at a time. I'm going to get into some things like the discount towards the end and talk about the trading room and training. So for now, the topic of this webinar is the Trump card. Tariffs and trade wars. So we know a lot has been going on in the markets due to Trump's policies. And let's just jump right in. So the first slide I've got here is called the Trump tariff market crash. So as you all know, the markets have been very volatile and for the past couple of months, and a lot of it has to do with Trump's policies and the tariffs that are, going on. So the first slide I have is here is the ES, which represents the S&P 500 weekly chart. And we had been going up in this uptrend for, this chart is shown for the past 2 years. This M right here in the lower left corner represents March of 2023, and at the time I took this slide it was April, so now we are in May, and I have an update of this chart which I will show after I talk a little bit about the analysis, because I have to submit slides to NinjaTrader about a month before the presentation. So but as I'm doing this webinar and the markets have moved since here, it would be interesting to see what is the most relevant information. So I've got that for you as well. So here we go. Did MBoxWave forecast the market crash triggered by Trump's tariffs, which led to significant sell-offs? Yes. So once again, we had been going up in this uptrend here, going zigzagging up and down as shown by the MGAN swing indicator, and then poof, we've got a crash here, right? So it crashed more than 50% of what it's grown in the past 2 years. Maybe that's even 60%. I got to get a ruler to check that. But here we had it went up and up and up, and then boom, we had a sell-off here. So did MBoxWave forecast this market crash triggered by Trump's tariffs? Yes. So let's take a look at that analysis right now, and I'm going to go into these indicators for people that are new. I'm going to get into them and then tell you where you can learn more about them as well. So here's my markup of the same chart that's going on here, and as we are edging up here, the first thing to notice are these numbers on the chart, like 461 minus 317, 660, 249, 85, 85, 18. So the first thing to notice here is right before the sell-off happened is we had to here plus 18 because that's positive here, weakest demand in over 2 years, right? So we're looking at this March of 2023, and this is the weakest demand we've had in over 2 years. So that's got to already, give off some warning signs, right? So we had been going up, we had strong demand, 461, 660. Now all of a sudden we have 18, and we're no longer making higher highs either, right? This is slightly lower than the 85 wave. And so that's already of importance. As we are also going up, we kind of see that the buying flattens, flat lines on higher highs. It's not growing. And at the end of it here, by the time we get to this plus 18, we have a total absence of buying. So that's what the MBox histogram shows. It shows the buying and selling in blocks, which corresponds to these boxes on the chart here, the blue and the red boxes. And you see the buying and the selling within that box in the MBox histogram indicator. Then at the same time, we get this box here which corresponds to this movement here of selling. This is the most amount of selling we had in the past 2 years, right? It's more than even this. And we're going to talk about this situation here. This is more of a effort, no result box here. I'm going to talk about this bonus. So we've had the most amount of selling. What we're getting is, look at this, we're getting a cluster of sell signals at market all-time high. We got the up thrust with the stooges of stooges and then another stooges. And so this beginning to transition and tip the analysis to be bearish. We had, a pullback here, buy and a buy here, and then we had all these sell signals here, right? And so what began to happen? So as we had a drop in demand of plus 18, we have this minus 155 down wave here, and I have 3 question marks like, what in the heck does that mean, right? Because we had not had so much supply since this minus 317, which was over a year ago, and then we had these weak jabs down. Now we have a minus 155. It doesn't look like it made a lot of downward movement, but this is increasing supply. If we compare to the minus 87, minus 135, and minus 7, this is increasing supply. And this can be interpreted as the distribution, right? It's ramping up. The supply is beginning to distribute before the sell-off happens. And that is purely a Wyckoff sort of situation going on here. We've got the supply coming in before the sell-off. So we got the supply, the weak demand, then the sell-off happens. As soon as the sell-off begins happening, we have the most amount of selling we've had in the past 2 years. We have MQ delta, which shows the overall buying and selling. So we see really that as we're getting to the higher highs, buying has become exhausted, and there's almost none of it left. As soon as the sell-off begins to happen, we have a crossover to overall selling, which can be seen visually here. And bam, market dumps. We see this huge down red bar here corresponding to a huge pace of bids. So the X pace shows the pace of offers and the pace of bids. So the red here is showing the pace of the bids. It's showing the speed at which the bids are happening. And this is the most that we can see for over 2 years, and probably even more than that if we scroll the chart to the left. So it becomes significant. So after the sell-off happens, we're down here. We get this huge X pace spike. So what is this? Is this climactic? That's the question to ask. And I have an answer for you about that, because, we've had a few weeks since then, since I had to submit slides early to see exactly what happens after that. And I guess since I'm talking about, but I'll get to the bonus effort, no result in a minute here. So if we overlay here, I don't have any analysis, but we see that after this climactic selling here, what happened? Price corrects. So this is very often happens when we are overly climactic, that price will rebound, and X pace of the bids here did expose that. So had you been watching this closely or carefully on the weekly, you could say that, there was a high chance that, there was going to be a rebound here due to the climactic action. So this is the power of MBoxWave. It gives us insight of what potentially can happen going forward. So I already talked about the sell-off here. Let's talk about here this bonus, right? So we've got this effort, no result situation here, as I call it, because we had a minus 317 supply here and we had no new low. So typically effort, no result happens when you have more of something and the result is less. And the result less being here is no new low. And it's a lot of effort was spent trying to on the selling and supply side, and we didn't reach that result, and you can play this kind of trade as well. Once price begins going up, you could see that this was an effort, no result. The bears failed to push price lower, and you can get in a long entry here. The other thing I was talking about, the box here, I want to return because this is more subtle, this box right here. So like I said, we had this price move corresponds to this box, right? Now look at this box. This box is about half the length as this box, and it had a good amount of selling. Not quite as much as this, but still it's not proportionate, meaning for the amount of selling there was, it didn't produce much price movement down, meaning it's struggling. So we are struggling to come down. So we can see that in the MBox histogram here, comparing the selling block with this box price moving down, and then we had in the wave the minus 317 effort, no result, and that caused the price to propel back up. So that's kind of the bonus here in the subtle analysis. All right, so I'm going to get moving on to the next slide. Like to welcome everybody again to MBoxWave. I'll talk briefly what this is all about for new people, and just briefly my background. Trading, I've got a quote here. Trading isn't about chasing every move. It's about the discipline to wait. The best setups speak loudest to those with the patience to listen. And that's true. The goal here is not about catching every single trade. We want to get the high probability trades and consistent results. So MBoxWave is all about catching quality trades and finding a reliable edge in the markets. Stop forcing trades and allow the markets to tell you what to do next. And that opens the door for consistent, reliable results. That's what we're all about here with MBoxWave. We're not trying to catch every single trade. We cannot as retail traders. We're not an HFT firm. We are retail traders. And so we need to use a reliable analysis and edge over the markets. So again, I talked about the 10-year anniversary this year, and so I'm going to provide a 10-year anniversary discount code at the end of the presentation, and this is the biggest discount I've ever offered. So stick around if you want to take advantage of that. Who am I briefly? I've talked about this before, but I'm ex-Silicon Valley software engineer. I'm the sole creator, developer, active trader of MBoxWave. I'm the only one. There's nobody else here. I programmed all the indicators. I add all the features. I continue to update. I trade it. There is no team MBoxWave. It's just me. And that way I can provide a consistent quality of the software that I use myself. That's the benefit of doing it all by myself. Trading community knows me as MBox Mike. So what is MBoxWave? It's a complete order flow trading system that tracks supply, demand, buying, selling, accumulation, distribution, speed of bids, offers, control of bids, offers. And I'll tell you later how you can learn more for people that are new. MBoxWave exposes optimal entry points via algorithmic buy-sell signals. Yes, there's lots of algorithms, and there's also possible to do automated and semi-automated trading. MBoxWave is an entire community of traders, and I've got a Discord trading room. I'll talk about that a bit later. What is the goal? To provide the best technical analysis possible and market flow of supply and demand, and to bring the entire community of MBox traders together. All right, so let's move on after we got that out of the way to Liberation Day. So Liberation Day was a very highly anticipated event. Everybody is waiting for it. Trump talked a lot about it. Let's see what the analysis told us before and after it happened. So preceding the infamous Liberation Day, there are lots of bearish signs. If you pay attention to them, you can achieve favorable results. So what does that mean? A June era here at Liberation Day. Liberation Day was April the 2nd. Trump talked a lot that he's got major announcements to make, and not a surprise that after Liberation Day, markets dumped, right? Because there was a lot of negativity about, the upcoming tariffs and all that stuff. And so could we have seen that beforehand? Yes, we can. So this is NASDAQ on a daily, right? And, before this whole dump happened, this is pre-Liberation Day, Liberation Day, and post-Liberation Day. So pre-Liberation Day, we've got, let's look at the MBox histogram. What's obvious? We see that selling is expanding, right? It is expanding. At the same time, we see that the buying is not. We went here to here, which is about the same. And when we reach this sort of higher high compared to the previous waves, there's no buying, right? So we already see a change here of selling, expanding, buying, drying up. We had these total bid control dots here, 1, 2, 3, right? And we had one total offer, so we are the bids are in control 3-1. That's already significant. We see that the Q and delta shows overall distribution, right? And the X pace, we see bids outpacing the offers, where I have arrows pointed. So let's get to the Liberation Day and, what could have been done here, and I'll share what I did here personally. This was the pre-Liberation Day. Say, okay, markets moved down. We say we had not traded this down move at all. We see a huge minus 479 supply, right? That speaks clear and loud. Minus 479, that's larger than anything else we've seen on this chart. And this is a daily, so we could see, a couple months ago, so that's pretty strong. We get a pullback with a sell imbalance minus 35 on an up wave. And then we get Liberation Day minus 1, which is a sell imbalance. So what could have been done here? How do we time the trade here? Let's break it down. So I'm going to zoom into this, pre-Liberation Day to the Liberation Day, and how I personally traded it. And so this is how we anticipate the move of a market. So let's go to timing the markets. So here, looking for the entry in anticipation of a big move. I'm going to talk about leverage ETFs here. It's actually something that I've begun to dabble with in the last year or so. Mostly I did futures trading, but this was a great opportunity to use leverage ETFs as an instrument when you don't need to worry about the exact entry. So we had many signs before Liberation Day that painted a bearish story. So I talked about that. So for example, we are coming down again. We have the minus 479. All right. We are anticipating Liberation Day. There's a lot of negativity, negative news about it. People are worried. Markets are, scared. And MBoxWave, again, paints the overall bearish picture. So we're not just trading the news. We are looking at the overall analysis, which is this slide, is that we've got a very bearish picture. So now we are timing the markets, right? So I had a pretty strong conviction that the markets are going to dump after Liberation Day. So what did I start to do? I looked at this supply minus 479. I saw this pullback with the sell imbalance, and here I bought S triple Q, SQQQ, which is the inverse NASDAQ ETF leveraged 3 times. Because I wanted to use the strategy of not timing the markets exactly. Like I show in all my live trade videos, I have to time them exactly. Here with leverage ETFs, you don't, if you anticipate a move in a certain direction. So I bought a bunch of SQQQ here. This was my exact entry right here, not right here, but right here after the signal happens. So I'm showing you that it's not a requirement to get the entry nailed down exactly, but this is my exact entry at this price right here on this day. I can't see exactly the date it was, but when I marked it up, I had tracked it. And then I waited. We waited, about over a week. Liberation Day happened, and then it dumped. And I exited at the close of this candle here. So I didn't get the profits from the absolute low, but that's the way it is, and it's good enough. And what else did we say right before Liberation Day? Do you see this blue box up? We had more selling as price moved up. So there was already hidden selling going on. The smart money was beginning to sell this before this dump happened. So, looking in hindsight, the best place to get in would have been here instead of here. But again, the leverage ETF is to use as an instrument without having to worry about the exact entry. But this is like a bonus. We have an MBox histogram sell imbalance, more selling as price moved up. This is clear to me right here in this box. This is the smart money. This is the smart money shorting, selling before this dump happens. So whoever knew exactly what's going to happen, the insider traders, they like to cheat. But MBoxWave, we can expose that sometimes and get in on the ride. So market dumps here. I call it a day, take profits. Why? Climactic question mark, question mark, question mark. We see a huge, spike in the X pace of the bids. And for me, it was good enough. I made my profits and called it a day. And that was it. And as we can see, after this dump Liberation Day, price rebounds. And as price rebounds, what's very interesting is that at this lowest low, we have a contraction of selling. We have less selling on lower lows. Look at this. We have this selling. So right around when I got in, we had the peak, the maximum amount of selling. And as price dumps, we have less selling, which makes this a divergence, which means this can be traded. This sort of setup, meaning, price moved down, but we have a contraction of selling. Another, if you were doing ETFs, you could have bought the regular TQQQ if you want the triple leverage and play this upside here, okay? Or trade the futures. Mostly I do futures, but here I decided why not play with some ETFs without worrying about the timing. So that's how I did that here. And as you can see, there's tons of opportunities. And, we've got a huge X pace of the offers here going on, which is a sort of change in behavior, breaks this down move. All right. So we can examine that as well. One thing I wanted to return quickly to this slide, what I wanted to add here that I forgot to mention is that before the sell-off happened, see the way technical analysis works is that I say that we see price, everything's already factored into price. So before something happens, a price knows about it. And I just want to underline that is that, when we get to the tops here, 85 drops to 18, we're starting to get the selling, the supply. It's like even before the news happened, it's like the market already set up for this to happen, as if the market already knows it's going to happen, and then the news is released. So technical analysis is the most important factor here. And I just want to make sure that because I'm talking about news and tariffs, but the technical analysis is what gives us the insight before something happens. All right, so let's move on to the next slide. Cycles of bust and boom. All right, because markets are cyclical, goes up, goes down, goes up, goes down. All right, so here I'm saying that MBoxWave brings clarity to the market cycles, highlighting early bear signals, exposing change in market behavior, and forecasting, in this case, the bullish rebound or any rebounds here. So here I zoomed out on, say, for example, a ES 10-minute chart. So here the signals, you're not going to see them very clearly because I zoomed out. But what I wanted to show you and everybody is how everything cycles. And that, there are patterns that happen in the markets. And if you can identify these patterns, then, you can profit off of them. So remember, Liberation Day. So we're going back to Liberation Day, which was April the 2nd, which we see on this 10-minute chart. Right here we had a daily. We had a daily of the NASDAQ, Liberation Day here. Here we're doing the E-mini S&P, but both markets went down. So, we're going to look at this on a smaller time frame and see how that would have looked like, but zoomed out. So here we had the April 2nd Liberation Day, and then what do we see that's happening at this? Right here we have this peak here. Price punches up before we begin this massive sell-off. We have an overbought divergence. What's going on? So we see, do you see this buying here? And as we are making these higher highs relative to this higher highs, we see a consistent buying, decrease in buying going down here. While what's interesting is the overall buying is increasing in the Q and delta. So how can the MBox histogram be decreasing, overall be increasing? It's a mixed signal, right? So mixed signals are never, well, put it this way, they're never good news. If you're thinking, for example, if you're thinking about buying, they're never good news. What it does is here it creates confusion, right? Which means that, you don't want to be long here. These things do not agree. So you would not want to be long. So we have this overbought divergence in the MQ and delta, and here the consistent buying is decreasing. I call it consistent because these boxes are the punches, right? They're showing you the buying box by box. So we're having weaker boxes of buying, but the overall buying is increasing, and it doesn't coincide. They should both be increasing. If they're not, then, we should not be long. We should not be in a strong, bullish position. So that's what the divergence here is. Then we see in the X pace, we have a push down here. Boom, right here. And this was a pretty fast and strong move down. And the X pace bids shows this. And as we begin to sell off here, so I'll point out here, when this happened, we only have sell signals. So we didn't even, from this stretch to this stretch going down. So if we were day trading here, on the 10-minute chart, there were not even any buy signals, so that's really, really good. So MBoxWave filtered out all of that really well and provided only sell signals, like all these pullbacks and stooges. We see that sellers are in control. Okay, why? We have the consistent selling expansion. We see that the MBox histogram selling is expanding in this line. And we have overall selling expansion. Again, this adds up. This checks and this checks. Not like here that this checks, but this doesn't check, right? So we need, things to line up. And both the MBox histogram, MQ and delta, they both line up and show overall expansion of selling. So that's good. So the sell-off happens, and then what? Then price, kind of, becomes uncertain. We kind of rebound up. We test again here and shoot up. So what happens here? We have a change in behavior. As you can see, after we made the lows here and here, at this minus 235 as a test, selling contracts. We went from this selling to this selling. Not only, but we have a spike in buying here. I didn't draw an arrow, but this is a spike in buying right here. Selling contracts also in the cumulative delta, and buying appears. Do you see? We had no buying here, and now we have buying. We didn't have buying since here. See, if you look at the M cumulative delta, it did a really great job because all along this sell-off here, we had absolutely no buying, no visible buying, and now you have some visible buying. So that tells us we're no longer in that super bearish move. And we have this huge X space of the offers. The question is going to be, well, does that mean we're going to buy right here? Well, first of all, we're in a zoomed out chart, and I would zoom in and probably, look, I like to trade 1 minute, and some people like 5 minute, but I would not get in long right here. Okay, and that's what people are going to say. Okay, we've seen this. Are we in? No. We're looking at the overall analysis, right? We need to understand the entries in the context of the overall analysis, which if we're looking for a long position, what would be more appropriate is when we get to, before this bullish rally. What happens? Well, we see that buying is expanding. We see that the selling is exhausted, right? At this point right here, we see the selling is exhausted. So at this point, I would probably zoom in on a 1 minute and begin looking, for a long entry, right? Because we had the sell-off, we had the change in behavior, the buying arrives, and now we have a retest here. We're testing the selling, and we see that selling is exhausted once again, and we have no lower lows. This doesn't go lower than this price here. And so now I'm going to begin to look for an entry on the 1 minute chart, and here on the 10 minute, we begin to see a cluster of buy signals, and the offers are in control. So I want to just show that MBoxWave is very useful in showing the market cycles. You can zoom out on a small time frame. I like to do that a lot. In my live trade videos, I like to zoom out a lot on small time frames because they give you the insight of, say, a larger time frame without having to change time frames. You just zoom out. So now I'd like to talk about Confluence. So what are we looking for? And this is just an example of intraday trading. I've got a gazillion examples of live trades and other things you can look later, but this is the one slide I'm going to talk about of intraday trading here. Confluence is king. What does this mean? The more signals and indicators align, the stronger the confluence is, the stronger the setup. This is when the odds shift in your favor, giving you the edge to strike with high probability trade setups, right? So we're not looking at any one thing. Like sometimes people say, oh, I saw a huge demand. Should I buy? I would say we need to look at the whole picture, right? It's not so, basic as that. I would say, trading is not basic. It's not just you see one thing and you're in. We got to look at the whole picture. Once we make our conclusions based on the whole picture, then we get in the trade. So let's look at what's going on here. For people that are new or people that don't know what's going on, one of the things you can begin to pay attention to is, for example, the signals here. Right, and I had not talked about them that much in this webinar yet because I talked about them lots in other videos. But one thing you notice in this chart is we have sell signals dominance, right? We have so many sell signals, 1, 2, 3, 4, 5, 6, 7, 8, 9, and we have one buy signal here, right? That alone, if you just look at that, they'll tell you, okay, we are bearish. If you ever see one side of signals buying or selling dominating, that can, tell you the bias. And here, okay, we know the bias of a we know the bias is a bear market here, right? What else do we see? Let's begin by looking at the visuals. Usually the visuals are the easiest before looking at the numbers. We see that selling is expanding here, right? We see that we have a buying block here, but it contracts very sharply on a higher high, right? We went from demand 155, 115 to plus 48. So demand dropped and buying dropped, right? We are always weighing things. So somebody will say, okay, Mike, what about this? We went from selling here to selling here. Is that a drop? Well, it's not as big of a drop as this when we went from something big to absolutely nothing, right? So everything is a relative comparison, right? Yeah, we did drop here, but it wasn't as big as here. And we're not thinking, I would not be looking for a trade in this area. I'm analyzing this for the trades we can get going forward from this point on and down. Why? Because I'm always looking what the other side is doing. Action, reaction, right? So we have selling expanding, buying drops on higher high. We get renewal of selling here at the time the triple algo short is happening. I'll talk about that. We had the initial distribution. And then we had here a divergence of overall buying but no consistent buying. So this highlights the difference between the cumulative delta and the MBox histogram. Here we have overall buying shows we have buying, but here we have no consistent buying. That's a divergence, right? Again, it's like, they don't match up. This doesn't match up with this, which makes this a question mark, meaning you would not want to be long. It points towards a bearish picture. All throughout the X pace, we see very clear the bids, the red bars here. We are outpacing the green bars. And I'd like to now look at these signals here. And I'd want to show that 1, 2, 3, 4, 5 signals on this chart that if you would have taken without looking at anything else would have worked out. But I recommend you look at the other analysis in order for it to be an even higher probability trade. But I'm just highlighting that the ones that I circled would have worked out those short positions without even looking at any other analysis. Anyway, we got a triple algo short, which means we got a double algo with a sell imbalance here. So that's a strong signal here. So by the time we get to this triple algo, we had a bearish picture. We saw selling expanding, buying drops. We had demand also exhausting here. And, this was a valid entrance. But if you would have missed that, that's okay. Not a huge deal. What happened after that? Say we only started thinking about getting short after this point here. Say we're late to the game, Let's look at this. What happens subsequently? Plus 203 demand is a lower high, effort no result. Why? Because we failed to make a higher high. Here we had this wave is lower than this one. We failed to make a higher high, yet we spent a lot more demand. Same thing here. It's an effort no result because we spent quite a bit of buying here, and we didn't get that higher high here, right? So we see the initial distribution. Here's the renewed selling. So this is the continuation. And now, boom, we have the huge selling block here with this price, and then we get the expansion of selling. Now selling is ramping up. We get a nice double algo pullback with the sell imbalance. This is another short position here. Could be initiated. The triple algo in here and this one are very strong setups because of the overall underlying analysis. And if we are in as we are coming down, what happens? We have a plus 13, no demand. That's a very weak number. We get to 55, guess what? That's more demand than the previous, but no higher high. It's an effort, no result. Keeps you in the trade. Plus 112 is even more demand than 55. No new high keeps you in the trade. So the overall indicators, MBoxWave expose setups, high probability setups to enter, and then also guide you while you're in the trade. So say you're in a short position, you see here in the MBox histogram continued selling dominance, right? It's a very clear picture here. And then the cumulative delta, right? So you would not be thinking if you were in this position, you could hold on to it until there's a change of behavior, or you see or you hit your goal. I talk a lot about hitting your risk reward, different exit strategies. I talk a lot about that in different videos and in the trading room as well. And there are different strategies you can use. For example, if you're in a short position here and you wanted to write it out until there's a change of behavior, when would you do so? Well, look at this X-Pace here as an example. Here you have a green bar here. That's the highest green bar we've seen in this whole chart here, and that's a valid exit. Whenever you see something is a little off, looks a little strange, you can exit, or if you would have hit your previous take profit level, or you hit your goal for the day, then you're done. But as we edge down, you see we had this minus 502, then we have this really quick contraction, minus 63. We went from 502 to 63. That's a huge contraction. So probably begin to think about, well, maybe it's time to start getting out. All right, so we talked a lot about different analysis. I want to get into a little bit about automation and strategies, because that's a popular topic. So can MBoxWave be automated? Yes, MBoxWave can be automated via API, Bloodhound, Blackbird, NinjaTrader strategies. MBoxWave is so feature rich that with a little imagination you create your own strategies with high probability setups. A lot of members have done this and do this. What I show in my videos and how I trade, those are my ideas and those are how I trade, and people have come up with their own ideas as well. There's tons of different kinds of setups you can look for. You can scan for the signals. You can scan for, the cumulative delta, the X control dots here, and you can combine all those. You can create complex conditions using the API, Bloodhound, Blackbird, and you can create complex conditions for high probability setups. There's over 100 plus videos I got on YouTube, including webinars and recorded live trade videos that show the methodology in action. And it's a perfect resource for ongoing learning and trade ideas. And there's a bonus here. The bonus being that members do share strategies for free that are accessible in the MBoxWave trading room, in the Discord room. And so a couple of the webinars I'd like to highlight. Last year I did the semi-automated algorithmic trading. I showed how to set up alerts, right? And easily. And you can be notified like when you get double algorithms, triple algorithms, up thrust, springs. And I showed how to trade, these strategies. This is a very worthwhile webinar to watch, and so are these. I had a Wyckoff Springs up thrust mechanical trading strategy where there's just a fixed set of rules. You don't even have to think. You follow it, and it's got a high win rate. And then there was another mechanical strategy trading double and triple algorithms as well. Both these are worth watching. They're an example of what you can do with the algorithms. This webinar I did a couple of years ago, the 5D order flow, I'd highly recommend for people that are new, highly recommend to watch this, because this is kind of a foundational. It's not the first webinar I did, but it's kind of the one that it really explains all of the indicators and how they mesh together. So I would really recommend to watch this. Then there's, other webinars you can watch, absorption, and the list goes on. I've got 20 official webinars that you can watch. And let's go down here, and I've got 82 live trade videos. So I've got over 100 videos on YouTube. Here I did a video of post-Liberation Day, how I trade a market volatility, how I trade a strategy, then, different topics, pre-election, traded, just these are foundational for learning, and reinforce the concepts. You watch, if you become a member or you are a member, watch a video a day, and practice those concepts, take notes, be active in the trading room. So let's talk about training education. If you go to the site reads like a book. I updated all the indicators, signals, algorithms, and example strategies are explained. Like I said, there's over 100 plus videos of educational content on my YouTube channel. I have live trade recorded videos and webinars. There's the Discord trading room. Ongoing learning is a process. So once you're an MBoxWave member, continue to learn by watching the videos, sign up for the newsletter, subscribe to my Facebook or Twitter page, join the trading room. I regularly post new content online with my trade setups, how I read the charts. This helps reinforce the concepts. I am a big believer in repetition as the mother of all teaching. That's the only way to learn. You have to repeat it. That's the best way to learn. And that's what has helped me become consistent and others to become consistent. You have to repeat it. Don't jump from one trading methodology to another. If you don't like MBoxWave, then move on to something else. But don't keep skipping around. Pick a trading methodology and stick with it. If you stick with MBoxWave, then you can get the benefits from it, the analysis, and reach consistent profitability. Just stick with one system. It's not worth it to jump around. So briefly about the trading room. This brings all the MBoxWave members together. It's available to everybody with the grandfather package. There's lots of chats and analysis gets discussed, and screenshots are shared, and people gain experience by talking to other traders as well. Besides learning only from me, it's very beneficial when you are learning to be able to talk to other people as well, and get feedback from them and have exchanges with them. It's more interactive that way. It's not, I am like the instructor of MBoxWave and providing all of the education, but here you get to interact with other members as well. The more you put into it, the more you get out. Be active, you ask questions, interact with other traders. So now we are entering the final part of the presentation, which is the discount code. So this is the biggest discount I have ever given, and probably that I will ever give, because this is a 10-year anniversary discount. I wanted to make it nice and juicy, because I'm very proud of my work. I'm proud of what I have achieved. I have been a full-time trader already for many, 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 many years. And so as my way of giving back and to celebrate 10 years of MBoxWave, I'm going to give the biggest discount ever. Good for 24 hours. You'll get the full package plus the trading room. To get the discount, go to this page, MBoxWave.com/offer. So before I tell you exactly what the discount is, I want to show you exactly what you're getting. So if you go to the purchase page, you go to MBoxWave.com and you click here, the purchase button. You'll see it's available. MBoxWave is available for 5 platforms. Got, besides NinjaTrader, got TradingView, NinjaTrader, TradeStation, CR Chart, MetaTrader 4. You know, pick the platform that you are most comfortable with. All right, that's the, you know, my recommendation. It is not a requirement to use NinjaTrader. It's just the webinar I'm doing today is with NinjaTrader, but other popular platforms are like TradingView, CR Chart, where most of the users are across these 3 platforms, TradingView, NinjaTrader, CR Chart. There's less on TradeStation, MetaTrader 4, but there still are. It's up to you. They have the same indicators and signals. So what do you get? Grandfather package, you get all the order flow indicators, you get all the algorithm buy sell signals, 3 stooges, pullback, spring, up thrust, sell imbalance, buy imbalance, etc. You get the training education, you get the Discord trading room, you get access to all my live trade videos, recorded webinars, and so forth. All right, so let's look at what is the offer. Boom. So this is a one-time 10-year anniversary sale. Extra $400 off. I've never given $400 off. It's the biggest discount ever. So normally it's $16.99. I'll give it to you for $12.99. So as you can see, $16.99 on the purchase page. I'll give it to you for $12.99. All right, biggest discount I've ever given. If you're going to get it for, you know, NinjaTrader, CR Chart, TradeStation, MetaTrader, use this link. If you're going to get it for TradingView, use this link. They're different links because of the way the payments are processed. If you get the grandfather package, you'll automatically get a license. There's no need to wait. It'll be an automated email, and you'll get it right away. So this is, again, a one-time 10-year anniversary sale, the biggest discount I have ever given. $400 off, extremely limited time only. Like I said, it's a 24-hour sale. You can take advantage of it as long as you see this page like this. And yeah, so if you have any further questions, you can get in touch with me via the contact form. You can click here, contact, and you can write me. You can visit MBoxWave.com. So that is the webinar for today. I hope that it was very informational. If you have questions, contact me. Otherwise, if you join, I'll be happy to see you in the trading room, and you'll be getting a full system that has everything you need besides the software. You'll also have the support, the trading room, the education. Basically, I am providing everything that I wish I would have had when I got started in trading. And I've talked about my trading story in other webinars. So if you happen to watch them, you'll learn more. Otherwise, everybody, thank you for joining me in this webinar. I hope that it was useful and educational, and I will catch you later. Bye-bye.